Hello and welcome back to Mr. Curran's Ledger-ary accounting tutorials. What we're going to be concentrating today in this vodcast is how to actually create general journals for a service business. But before we do that, here is an accounting joke which I found to be very funny. How does an accountant stay out of debt? He learns to act his wage. Now in the last vodcast we actually looked at the nature of accounts and what actually happens when an account actually increases and decreases from a transaction analysis point of view. So we're going to take transactions one step further now and actually go into detail as to what a general journal actually is. So a general journal is basically an accounting document which summarizes the transactions that the business actually had for the month. So within a general journal, you'll actually have the date, the accounts that are actually affected, the folio, which can either be the general journal number. So in the first one, it could be GJ1, or using the account numbers from your chart of accounts, and whether those accounts are debits and credits. So the big difference between a general journal and a transaction analysis journal is you don't have to actually document the nature of the accounts, whether they're going up or down. So this now becomes assumed knowledge. So I've just actually put in this vodcast the debits, what happens when assets, liabilities, owners' equities, revenues and expenses go down or up, and the effect that that has on the actual journal itself. So you'll actually be using this knowledge in the creation of your general journals. So within this vodcast also I've just added from last vodcast the hints and tips on what actually to look for when you are dissecting each of the transactions and creating the general journals from there. So you can use these tips in order to create your general journals. So in terms of the actual accounting process, we are concentrating on this part here. So creation of journals. From there, you'll actually create a ledger, which is in the next vodcast, and actually produce a trial balance. So within your exam, you'll need to actually do these financial transactions in order to get your marks for the KPP objective for the accounting syllabus.
Let's go!
Hello and welcome to 11 Accounting Vodcast number 1. This podcast will be looking at how to actually conduct journal entries, and with the following vodcasts looking at how to actually transfer the general journals to the actual ledger itself. So on this screen here I've got about 6 journals here which we'll actually go through, and while I'm doing that I'll show you some tips in order to determine what to actually put in the journal. So one of the journals which you'll actually get for the exam will be centering around owner contributions, services performed both cash and credit, buying of expenses and supplies, and also owner withdrawing cash. Now the first one that you'll probably always get in any circumstances is the owner contributing some money to the business. Now to determine what accounts actually are affected in the journal, I actually look at some of the key things here. So the first one here you'll see is Robinson Boutique, and the other word is started. So this is the actual owner themselves and starting the actual business out. Now, in order to determine whether it's capital contributions or drawings, you look at whether keywords being here withdrew, which looks at drawings, and the rest will actually be a capital contribution. Now, the other side is to look at what the actual owner is contributing. In this case, it is cash. So over here on our general journal, we always put the name of the business. And the first thing you need to do is the date. Now the debit side of the journal always goes first. In this case the debit side is cash at bank, and the owner is contributing $50,000. So we put cash at bank here. The folio, since this is the first general journal entry, so it's general journal number 1, and the debit side is how much they're actually contributing, in this case 50,000. Now on the other side is the credit side, in this case it will be capital contributions, general journal number 1 again, and $50,000. Now you always need to make sure that both the debits and the credit side actually match up. And just put a narration. Okay, and that's one journal actually done. Now the next journal we are doing is on March the 3rd. Now some of the giveaways here are keywords that you're looking for is purchases here. Okay, so when you see the word purchases, it means you're actually buying something. So the two things which a business can actually buy is either supplies or an asset, okay, or expenses. In this case, we are buying supplies because it actually says inventories, which are former supplies. And the other thing which you need to look at is these keywords here. When you see on credit and a name, that means we are buying something from someone and we have to pay him back at another date. So in that actually looks at accounts payable. So in this case here, the debit side will be the supplies, as supplies being an asset which is going up. We're going to put GJ2, General Journal 2, and it is for $4,000. Now the next side is obviously accounts payable. And this is for S. Burgess, so that's the name we actually owe money to for $4,000, and always again make sure that both sides actually equal. So the next general journal is conducted services to Al Cameron on credit. So again, our credit on credit actually means that someone either owes us money or we owe them money. Since we are conducting a service, that means someone owes the business money, and that is deemed to be called an accounts receivable. So accounts receivable being an asset, it will be on the debit side. General Journal number 3, and it is for $1,500. And the credit side of the journal will be services revenue. Okay, now the next one, it says here cash services. So the main difference between this journal and also the one above is this keyword here is cash. So when you see cash services, it means that we've actually received money for services that we've actually done. So no one owes us any debt. So when you see the word cash, it usually means cash at bank is either going up or going down. And in this case, since we're receiving money, we've got more money in the bank. So that means it will be a debit. Asset going up means debit. And again, since we've performed some services, it will be for services revenue. Now, the next journal here is purchase equipment for cash. So we can see here a keyword here being cash. Now since we are purchasing something, that means we have actually bought something, which means we have less cash. So that means that cash at bank being an asset going down will be on the credit side. Now we also need to work out what is on the debit side. Now since we purchase something, you can purchase supplies or some expenses or some equipment. Now, usually to work out what type of asset it is, I look for what is being purchased. So I usually go for the word after purchase. So in this case, it is equipment. You could also put plant and equipment is another good one you can actually use. I will accept either one. Next journal, it says paid salaries. So again, we are paying something, which basically means cash at bank is going down. So when you don't see on credit and you just see pay, that means cash at bank is involved. Now, the other thing which you're looking for is what are we paying, and that usually happens after. So it's salaries and rates. So we can group these together. Now you could put wages and salaries is a good one. You could put wages, you could put salaries. So you will get a chart of accounts in the exam and it will tell you which one to actually use. Next one will be rates, since we're paying rates. And since money coming out of the bank, cash at bank. Now, easy way to actually add these up is to use the sum function over here. Highlight what you want to add up and press enter. Second last journal, bought supplies on credit. So that basically means the same type of journal which we had on the 3rd of March. So what I usually do is copy it, Control C to copy, Control V to paste, change the journal entry number to number 7, change the amount to 1,250, and then all you have to do over here is to change the name. And last entry is owner withdrew cash. So when you see the owner, two types of accounts could happen with owner. They're either withdrawing money, which is drawings. Key word to give away here is withdrew. Okay, so it is a drawings. Now drawings has a debit nature, and since we are having more drawings taken out of the business, it's going up, so it's debit. And when you see cash again, obviously keyword there, cash at bank going down. And then all it is then is putting a narration at the end. And what I usually do is regurgitate what the transaction is. Okay, now some of the skills which you might know within Excel is how to insert a row. So you can see here we need to insert a row here. So highlight the row, right click, insert, and it will add rows for you. Okay, and that finishes the first vodcast. So look forward to the next one. Thank you very much.